Asset allocation means not putting all your eggs in one basket, especially in crypto, where the market is wild and unpredictable. Prices can skyrocket or crash overnight, so you need a plan to manage risk and capture upside. Don't just chase trending coins. That's gambling, not investing. Build a portfolio that can handle the market's swings and protect your downside. Think of your assets as a team. Bitcoin is your defense, altcoins are your offense. Bitcoin protects your capital, altcoins offer growth, but come with higher risk. A balanced portfolio combines both, making you resilient. The key principle is diversification. Spread your investments across different assets. If one fails, it won't wipe you out. Smart investors make many small, calculated bets, not one big gamble. This approach lets you seize opportunities without risking everything. Diversification is the single most important rule for surviving and thriving in crypto. It's the difference between lasting in the market and getting wiped out. Make it your foundation. That's how you survive the crypto roller coaster. Imagine putting all your savings into one hyped coin. It doubles, you feel brilliant, then it crashes and you lose almost everything. This isn't rare in crypto, it happens all the time. Betting everything on one asset is concentration risk. A single failure can destroy your finances. Even with Bitcoin or Ethereum, going all in is risky. The market is unpredictable. Regulations, hacks, or new tech can change everything overnight. Diversification is your safety net. Never go all in on one coin, no matter how promising it seems. Ignore the hype and so-called experts pushing you to bet big. Your goal isn't to get rich overnight, but to build wealth steadily. Spread your investments across multiple assets. This protects you from blind spots and market surprises. Risk management is your first priority. Don't be the person who loses it all on a single bet. Diversify, survive, and thrive. That's the smart way to invest in crypto. How do you build a diversified crypto portfolio? Start with 3 buckets. First, the foundation major assets like Bitcoin and Ethereum. They're your bedrock, stable, secure, and proven. Second, altcoins, everything that isn't Bitcoin. These are high-risk, high-reward bets on innovation. Only allocate what you're willing to lose here. Third, stablecoins assets like USDC or Tether, pegged to the dollar. They don't grow, but they offer stability and liquidity. Use stablecoins as a safe haven during market crashes or as dry powder for new opportunities. A simple allocation, most in Bitcoin, Ethereum, less in altcoins, and a portion in stablecoins. This gives you exposure to leaders, upside from new projects, and a safety net. It's not the only way, but it's a logical starting point. Think in terms of risk and reward. Structure your portfolio to match your comfort level. This framework helps you navigate the complex crypto landscape. Start simple. Stay balanced. That's how you build a strong foundation. There's no perfect portfolio for everyone. Your allocation depends on your risk tolerance and goals. Can you handle big swings, or do you panic at losses? Be honest about your emotions. They'll shape your success. Young with a long-time horizon, you can take more risk. More altcoins, less stable coins. Nearing retirement, focus on safety. More Bitcoin and stable coins, fewer risky bets. Your goals matter. Saving for a house soon? Stay conservative. Investing for decades. You can afford to be aggressive. Define your goals and time frame before investing $1. Align your strategy with your needs. Without clarity, you're lost in the market. Know yourself, set your plan, and stick to it. That's the key to long-term success. Make your strategy personal. Crypto isn't set it and forget it. The market moves fast. Today's winner can be tomorrow's loser. Your portfolio needs regular checkups and adjustments. This is called rebalancing, selling some winners, buying underperformers to restore your target allocation. It feels odd, but it enforces buy low, sell high. Rebalancing keeps your risk in check and removes emotion from decisions. Set a schedule, quarterly, yearly, or when allocations drift by a set percentage. The key is consistency. Don't chase trends or abandon your plan in a panic. A disciplined rebalancing routine keeps you on track for your goals. The market will test you. Your strategy is your defense. Stay focused, stay balanced. That's how you win in crypto for the long haul.